Your tax year is your annual accounting period for reporting income and expenses. Individuals are basically locked into the calendar year, but businesses may be able to use a fiscal year, a 52/53rds week year, or sometimes end up with a short tax year. On the EA exam, they'll test whether you can spot what's a normal, ongoing tax year choice versus what's only allowed in special situations. If a business wants a non-calendar year, the cleanest path is proving a substantial business purpose. That's the natural tax year idea. Think seasonal operations. The year-end matches the business cycle. The IRS is fine with that, but they are not fine with a fake business purpose that's really just trying to push owners' income into a later year. Here's the exam-friendly test for a natural tax year. The last 2 months of the proposed fiscal year must produce more than 25% of the business's gross receipts for the entire year. That's a numbers test that supports the story that the business peaks at year-end. If they meet it, they typically request the year using Form 1128. Example: a swimwear partnership wants a year ending September 30th because most sales happen in summer and the season is basically over by then. That's a natural business cycle argument, supported by receipts. They file Form 1128 to request the change. On the EA exam, watch for facts that scream seasonal receipts versus facts that scream owners want to defer income. Now compare that with a Section 444 election. This is for partnerships and S corporations that want a tax year other than the required year, but they are not claiming a substantial business purpose. Instead, they make an election on Form 8716. The exam loves this fork in the road. Real business purpose goes Form 1128. No business purpose, but eligible, goes Form 8716. Section 444 has eligibility limits. The entity can't be in a tiered structure, and it can't have previously had a Section 444 election in effect, and the year they pick has to meet the deferral period requirement. Translation: you can't just pick any year-end you want. For EA exam questions, your job is usually to identify whether Section 444 is even on the table, and then match it to Form 8716. Which of the following is not an acceptable annual accounting period for reporting income and expenses? The choices include a 52 to 53-week tax year, a short tax year, a calendar year, and a fiscal year. Think about which one is not really an ongoing annual period, but instead shows up only in special situations. Think about it. The correct answer is a short tax year. A short tax year is under 12 months, so it's not an acceptable annual accounting period on an ongoing basis. It usually happens in the first or last year of an entity, or when changing accounting periods with IRS permission. The tempting wrong answer is the 52 to 53-week year, but that can be a valid fiscal year method. Future Capital Incorporation, which business activity would automatically classify it as a PSC, a personal services corporation? The options include education, publishing, engineering, and construction. Think about the list of personal service fields the IRS specifically names. Think about it. The correct answer is engineering. Engineering is one of the enumerated personal service fields, along with things like law, health, consulting, architecture, accounting, actuarial science, and performing arts. A tempting wrong answer is education, because it sounds like a service, but it's not on that specific PSC list tested on the EA exam.